Hi guys, welcome to the honeystocks.com stock market weekend analysis for the 19th to the 21st of October 2019. Now, if this is maybe your first time here or maybe you are an avid viewer of all my work, please just pause the video, make sure you're comfortable with that. Do not act upon any of these charts. This is just purely research, my own thoughts, and is not intended as financial advice and all the good stuff. I think the one thing that I've been asked quite a lot this weekend, just via email and through my various social channels, is what's going to happen with the news that's come out this weekend with Brexit. So I think with the stance that I have, it's very much the skeptical hippo face. I don't really know what to expect. I don't think anybody really knows what to expect when the market opens tomorrow. I think all we can really do is get a plan of action in place. We know that it's a very news-driven environment at the moment, but those are, approaches that seem very, very logical. It's just be prepared for every eventuality. Now, I'm going to be going through a lot of charts with you this weekend. Now, the one thing that I have to say is that I do not do any get-rich-quick schemes. I'm not a day trader. I'm not constantly in and out of positions. The very specific technical approach that I have is geared more towards a time horizon that really works from weeks to months if we have a market or we have a stock that's really playing ball and we're in a very clear uptrend. That's my preferred approach. There are elements of swing trading that you will also see as I walk through the charts. I am also registered with the CMT Association, so technical analysis is something that I'm widely known for. A lot of my work is featured in some very prominent investing publications, etc., around the world. So hopefully this just gives you a bit more insight as to the approach that we have at honeystocks.com. Many of you will be stepping in the brown stuff at the moment. I understand it's not very pleasant, so as I like to do, I'm walking through a lot of charts that I get requested during the previous week, and hopefully it helps in some way. And if you do enjoy this, please do subscribe to our YouTube channel down in the bottom right hand corner there. But let's just dive into the charts. Now, I really want to just, before I go through the individual stocks, is really just walk you through the relative rotation graph. Now, this is the daily relative rotation graph. So this can flip at a moment's notice, but the way that I like to use this, and there was a chap on social media that commented this week saying that it looked like it was complicated and a bit fancy, and that it looks like it might be counterproductive. The one thing that I need to say is I don't base my investment decisions on the rotation graph. What the rotation graph really does is it just gives us another layer to the decision making, and it just lets us see what's happening in the market, where the momentum is shifting. As we can clearly see with the rotation graph this week, there's a very clear money flow momentum out of gold. We've got the Treasury Bond ETF, utilities. We can see that semiconductors, which I will be touching on during the individual analysis, but we are in an area here where semiconductors are seeing momentum flow into it. So I find that very, very interesting. Now, the strength in the market over the last 12 months has clearly been in these areas. If we use the S&P 500 as the benchmark, really, if you want to have outperformed this year, these are the areas that you would look to have been allocating risk. Many of you will consistently keep going back and trading the same stock over and over. Many of you will be married to individual stocks. My personal approach is that I'm only dating. I'm never marrying. As soon as a stock starts to disrespect me a little bit and doesn't treat me well, I'm just looking to move on, say thank you very much for the good time, and just look to find somebody else. And that's really the approach that I've kind of got with stocks, and that just seems logical to me. So the S&P 500, as we can see, is we're pushing up against all-time highs. I think most of us understand this. I'm not going to labour the point of the S&P 500 this week. I've talked that one to death. But what we do have here is we have the Global 100 Index ETF. Now, for those of you that don't know, this is a basket of the biggest stocks in the world from every geographical location. You know, we've got Samsung, Apple, Microsoft, all the big companies from the US, Europe, Asia, Australasia, etc. So this is very, very telling to us, because if we get a breakout in global equities, that's hopefully going to have a knock-on effect, and then we should hopefully see more of a bullish case, because at the moment we're in a bit of a sideways range, we're in a bit of a sideways mess. Breakouts aren't really working, so we have to be very, very selective in the stocks that we're choosing. And like I said before, I like to identify strength in the market. And the biggest stock on the planet, Apple, is holding firm at the moment. We've broken out and it's holding. I don't think we can ask for any more of Apple at this stage. I think if we get continuation on this breakout, again, that's not a bearish case for the market. So I'm watching Apple with a lot of interest at the moment, and it is an area that you might want to consider allocating. I think what you'll understand as I move through quite a lot of these charts is you should always have an eye on where the danger zones and where the blind spots are with your individual stocks. And again, that just makes sense, just so that we're not holding blindly. Nike, I was asked about this week. For those of you that don't know, this is a stock that I have been bullish on since this level here. I presented the thesis that we were looking at a double bottom pattern. That has since been proven correct. And I think if you're in Nike at the moment, I think this is a logical profit target to aim for. I think anything around $99, which is fast approaching, would seem like a good spot to say thank you very much, let's revisit you another day. Now, Netflix. This is a stock that has many of you in a bit of distress at the moment. I think just purely from the conversations that I have with traders around the world, a lot of you that hold Netflix, especially at the moment, are on a bit of a roller coaster. We've got earnings, we had a huge move to the upside, and I think it's pretty clear with Netflix that move to the upside has been an opportunity for a lot of the big money to dump their positions. That's the way that I'm viewing it at the moment. We've got a stock that's in a lot of distress. Again, for those of you that don't know, I've been bearish on Netflix since this move here. And again, it's not a place that I would be looking to allocate risk. I think what will become apparent is there are many better looking stocks at the moment, and Netflix at the moment, I'm sorry guys, but I am still bearish on Netflix at the moment. The stock is just in a bit of a mess at the moment, unfortunately. Now, semiconductors, Nvidia. Now, we've got what looks to be a potential failed breakout in Nvidia. Now, what I'm just going to do is just quickly switch over to the weekly chart here. And we can actually see that with the weekly chart, it hasn't actually broken out at all. Now, what we're really looking for here is we really want to see a close above this level, and that would be a signal to us that we might want to consider allocating risk to Nvidia. The daily chart, yes, we've clearly got that resistance in place there, but we do want to see a full-on breakout on Nvidia with momentum, with volume, and we've just not got that at the moment. So Nvidia, it's very much a case of watch this space, and we're very, very close to breaking out. So I think it's something that we should have added to our radar. Now, Campbell Soup, I think I'm not a fan of the product, let's say that, but I don't care about the product. It's whether the stock is going to pay me a profit that I'm concerned with. And I think this level here makes a lot of sense. I have been bullish on Campbell Soup since we had this breakout here from this box pattern. So that's absolutely a stock that's moving, it's been performing, and I think it's a case of just waiting for that level above $50, above the 200 MA, and I think it might be attractive to quite a lot of you. Now, it's been a while since I've had any of the weed stocks come onto the radar, but somebody reached out to me this week asking about CGC. And I think at the moment we're obviously in a very clear downtrend. I'm not going to labour that point too much. I think the chart, we can clearly see that. But I'm watching this level with a lot of interest here. I think what happens here is going to be absolutely key with CGC. I think for those of you out there that have bought in really high and you've bought into the hype, I think you need to be very, very conscious of this level. There always has to be a point on a stock where, you've maybe bought in, but there always has to be a point where you buy in zero, where you have to say you're done with a stock. Otherwise, you can get into catastrophic losses. And I think that's the difference between the trend following active investor mindset rather than the investor who just holds no matter what. I think there always has to be a point when you say you're done. And I think for me, this is a level that is going to be key. Do we get a breakdown here which will open up more short opportunity, or do we rally and do we break out of this descending trend line and move to the upside? Those are the questions that I've got with CGC. I think the weed ETFs are not looking terribly appealing either. So I think that the sector as an asset class it's falling apart. And my sympathies for anybody that's holding out there. But it's not an area that you should really be looking to allocate a lot of risk, in my opinion. Cisco Systems is, again, it's flirting with key support levels in the market. I think we can be bullish above this level, but I think below it, I think then we drop to 40. So that's a level that I'm watching with a lot of interest at the moment. And yeah, that chart just makes a lot of sense to me. Now, we also have JD.com here. I think with JD, I think we can clearly see that it's given us a lot of optimism in the past. I think especially with the Chinese tech stocks, we all know the trade war, etc. It's not been kind to China. But there are still some stocks that I think a lot of us have got an eye on, just purely because they may have done well for us in the past. They might be doing well for us at the moment if we bought in down here. But I think for those of us that are technically minded, I think a lot of us are just waiting for this key level to break. I think anything around $32 would represent a good entry into the market. Likewise, we have to always identify where the danger zones are and where we might see some distress selling. And in my opinion, this is the chart to watch for JD. Electronic Arts, again, I think that this chart makes a lot of sense. I think a breakout, I move above $100 and it becomes appealing. Now, Match Group. Now, I'm the first to say that this move here was incredible for a lot of us. I think what we have to understand though is that we're only dating, as I said before, and I think when we have an objective view in the market and you remove the emotions from your decision making and you just look at the chart, you build the chart, and you understand what the chart is trying to tell us, this chart at the moment for Match Group is very much a cautionary chart in my opinion. We've got a very potential very bearish pattern developing here, and I think if we break below the $70 level, then I think that's a problem for Match Group. So if you're out there and you're in Match Group at the moment, I think you can still, you technically, absolutely, you can still be bullish above this level, but you need to understand where the blind spots are and where you might want to consider just, you know, saying thank you very much, Mr. Match Group, and let's move on. And that for me is the chart for Match at the moment. Visa, I think there's a very logical profit target in place here. It looks like we're in a bit of a range at the moment, so we're kind of just bouncing between price points, in my opinion. And again, any break below key support levels would be an issue for me, as you're going to see with some of these cloud-based tech stocks that I've been asked about non-stop over the last couple of months. So I think with Visa, that's the chart. This is what can happen when we get very clear support levels broken. I think Zendesk at the moment, I think this is the chart we've broken down, and it wouldn't surprise me in the slightest if we head towards 50 here. And that's just a technical view. If you're a fundamental guy and this is a great company and you believe in the company, that's great. For me, I look at the technical side of things, and it just makes sense that when key support levels are broken in the market, that price should naturally gravitate over time towards the next level. And for me, that's the next level around $50. United Rentals looks like it may have broken out last week, which is positive for those of you that maybe want to allocate a bit of risk here. This is a chart that I've had on my radar for the last 3 or 4 months, patiently waiting for this, and this is, I think the chart really probably speaks for itself. When we get resistance that's broken dating back 12 months, we can say that that's a significant level for that individual stock. So hopefully, with, I think, earnings out the way, I think that should hopefully be a catalyst for a bit of a move to the upside. TJX I actually highlighted last week as an area that you might want to consider on this breakout. Lo and behold, the thing has flown, I think, 8 or 9% in a week, and that is an area that you might want to consider. I think with what price has done, I would probably expect a little bit of a pullback. You know, stocks don't go up forever, so I think if you've missed the optimal entry into the stock, I think you need to be a little bit patient. You shouldn't really go chasing an entry. You should let the entry come to you. That's obviously something that I work closely with my clients on, but I think the chart itself makes a lot of sense. This is a breakout that has worked so far, so I think technically we can be bullish above the $57 level, and that might be an area that you might want to do a bit of due diligence on. Now, big questions being asked of NVTA at the moment. I think the question is this a trading range or is this a double top formation? If it's a double top formation, this is very bad news for NVTA. This thing could plummet if this support level breaks. So you need to be very, very mindful here. We've got a bit of indecision candle last week. So what happens next week? Do we move to the upside and start to work our way back to the top of the range? In which case you're probably being offered a decent risk to reward proposition. Or do we break down and do we see a collapse? That's the question that's on everybody's lips at the moment on NVTA. It's a stock that I think many of us have on our radar, more of a swing style trade. So let's watch that one closely. Ballcorp has broken out of a symmetrical triangle pattern, is what I would deem this to be. Very, very logical that we start to make our way towards 81. Provided that breakout holds. So again, that's a stock that if it's not on your radar, I think given the strength of the previous trend, it's obviously taken a bit of a breather over the last couple of months, but this is a stock that you might well find starts to move on another run. It's been a long time since I've covered the AMD. I think for those of you that have followed me for any length of time, I think most of you will know that this is a move that rewarded many of my clients incredibly well. Since then, the stock has just done nothing. It's been on a huge move to the downside. Yes, there's an argument here that this dip could have been bought. I think for me, it's very much a case of just waiting for the breakout. But I think what I'm getting at here is, given the strength of the previous resistance in AMD, for the individual that asked me this week, I think this is the level to watch. I think if you're in there, it makes a lot of sense that around $34 you might want to just say thank you very much, let's revisit you another day. Intuitive Surgical, for those of you that understand chart patterns, this is a decent chart pattern. I think that there's a good bit of upside potential, and we are looking at this level very closely. A couple of my clients have done very well on this recently, and this is a level, I think above 580 makes a lot of sense. Yes, we have had a breakout here, so I would be watching this level with a lot of interest, and to see whether we get a rejection or whether we blast through and we go on and we create new highs. Procter & Gamble has earnings on Tuesday AM. So excuse me. Now, what I would say with Procter & Gamble at the moment is Procter & Gamble is very much in an uptrend. Now, we need to be very mindful here of this level. I think if we break below this level in Procter & Gamble, then that's a bit of an issue. And it just makes a lot of sense that we have to be bullish above this level. But given the earnings are coming up on Tuesday, you need to get a game plan in place. You need to have very specific rules in place. I'm not someone that likes to hold through earnings blindly unless I have a good profit buffer in place in order for me to hold through earnings. That profit buffer will generally be at least 10% in profit on the stock. That's not options profit, by the way. That's purely the profit that's in the underlying asset, which would be obviously the stock. So yeah, I think that chart here makes a lot of sense. Alibaba, again, is still in a huge sideways range. It's not a stock that's appealing at the moment, unfortunately. I think if you're looking for a new entry into Baba, I think this level here makes a lot of sense. Yes, technically I think you can still be bullish above this level, but it is still a bit of a problem for me. And for me, price is just trading in the middle of no man's land, and it's not a place that I would be looking to allocate much risk. Now, some of the tech cloud-based stocks, I think that this is the chart, I think, at the moment for SPLK. Now, we're clearly in a huge range at the moment, okay? But this is the level to watch. As we can see last week, we come down to test the bottom of that range, and it rebounded almost immediately, which is obviously good news if you're in Splunk Inc. at the moment. The expectation when a stock is in a range like this is that it should hopefully start to move back towards the top of the range. However, this is a concern for me because this tells me that there's a lot of selling pressure at key support and resistance levels in the market. The 200 simple moving average is very key to a lot of trading strategies, technical trading strategies. Now, because we've had a rejection here, that tells us that we might well be entering into a bearish environment for SPLK. So I'd be watching this level with a lot of interest. I think if you get a break below that level, that's a problem. in the same way that we've obviously seen key levels break in AYX this week as well. We've obviously dropped below the level that I've had highlighted for a good couple of months. Just said, look, if this level breaks, that's going to be a problem, and that's what's happened. So if you're out there and you have a short position in AYX, I think this is the level to aim for. Likewise, I am open to my thesis being changed on a lot of these cloud-based tech stocks if these breakdowns fail, because when we have failed breakouts and failed breakdowns, that can quite often result in fast and aggressive moves in the opposite direction. But I think at the moment, I think we have to be bearish on AYX, and we've had a breakdown from a descending triangle pattern. So that's not a bullish environment, unfortunately, guys. For those of you out there that have been holding this, you might want to stick around for a couple of minutes at the end. I am going to be going through a couple of things with you, a couple of options that we might be able to offer to help those of you out there. We've got Okta as well. Now, again, very similar to SPLK, where we've had a complete rejection there, and that's a problem. I think we're obviously in a bit of a range at the moment. It's in a wide range. I think you can still be bullish above $95 on Okta, but it's a roller coaster, guys, and I don't know if this is a position that's going to be making a lot of you happy at the moment, and I get it. I completely understand. It's stressful when you're out there and you're holding stocks and they're just not working. You're holding blindly. Maybe you don't understand the technicals. Maybe you're a fundamental only guy or girl, and that's just the game that we play with the stock market, unfortunately. So yeah, hopefully you find that chart useful. But if you are somebody out there that does struggle a lot, maybe you don't have any strategy in place, maybe you just find trading very, very difficult, you can maybe stick around for a minute or two here. And if you have enjoyed this, again, please subscribe to our channel. But if this is maybe the first time you've come across my work, I'm Sam, and like I said before, I'm registered with the CMT Association, and technical analysis is something that I'm known across the world for. And the reason that my work gets a lot of attention is because of the simplicity with which I teach charting, trading. I don't like to overcomplicate things, and that's really the approach that I have. Now, I also run honeystocks.com, and like I said before, we educate in the trend following approach to the market. We do not teach day trading. We do not teach short-term trading. I couldn't think of anything worse than being chained to a screen all day trying to pick tops and bottoms on 30-minute charts. That's just, it's not a way to live life. And I'm often asked, Sam, can you help me? And I think if I was to break it down, these are the types of individuals that I can really help. And I think if you maybe have a career or a business and you're trying to kind of fit trading around that, maybe you want to get away from day trading because you finally realize that it doesn't work. Maybe you want better consistency. Maybe you want to learn for yourself and not just hunt around social media trying to pick up charts here and there, and just learn this stuff for yourself. Have minimal stress. Maybe you want to align with a successful trading group, and maybe you just want to learn how to enjoy life a bit more and not be stressed by the markets. I think those are the types of individuals that I can generally help. And one of the ways that I help people is, aside from obviously teaching the technical strategy and teaching all the good stuff, I will also work with you so that you can build your own rule set and have a trading plan, and you can build that and you can have that for the rest of your life. Now, the good thing about what I do at honeystocks.com, and because I'm bound by a code of ethics with the CMT Association, I also like to log every single chart that I have posted to my trading community over the last 2 years. Since I started the website and since I started educating incredible traders across the world, I have charts that I like to support my group with, and I log them all on my website. I don't know anybody else that does this. I have surveyed at least 20 well-known websites who tell everybody that they have the best trading group in the world. I don't know anybody else that posts the charts and logs them all for complete transparency. Now, I'm not saying to you that you can come in and learn our approach and make 1400% next year. Definitely not. You cannot move in on every single chart that I post, because you only have a certain amount of capital to allocate. And that's the approach that we have. So if you are maybe out there and maybe you're learning from losses at the moment, I completely understand that it is the most soul destroying, stressful, horrible, it's just something that I have a lot of sympathy for. And the reason I have a lot of sympathy is because I have spoken to hundreds of traders across the world over the last couple of years, and just many just don't make it back to the markets because they tell themselves that it's too stressful and it can't be done. So if you're out there and you're learning from losses at the moment, I might be able to help you. If you're out there and you're hunting around YouTube and you're hunting around social media for all the free content and you're trying to pick up everything, I think the way that I like to put it is, if you want to be a heart surgeon, you could go onto YouTube and you could pick up tips here and there on how to do heart surgery. I've got no doubts about that. But the same applies to trading. Again, you can pick up all the cool little tricks, but how do you put it all together? That's the key. And I think if you want to accelerate your learning curve, again, I might be able to help, because we've made a difference for many, many individuals all across the world. And I think the question is, do you want to keep doing it the current way, or are you open to learning a new way? And if you're open to learning a new way, like I said, you can go on and check out all our testimonials on our website, and we've just got a very logical approach to the market, and we make it very, very easy. If you are somebody out there that is determined and you are just wanting to learn an approach, you want to get away from the approach that you're currently doing, if you want to talk to somebody, then you can jump onto our website. Like I said before, honeystocks.com. You can tell us what you struggle with, and we'll have a conversation. It really is that simple. We'll jump on a call for 20 minutes, and if I can help you on that call, then I will try to help you in some way. Yes, we've got a program. Yes, we've got a group, etc. But not everybody that comes on these conversations with us, it's appropriate for us to enroll in our program, because we don't teach every strategy, unfortunately. We've got a very specific approach, and just go on and you can choose a time. And if you are somebody that is genuinely struggling out there, don't sit there in silence and have all the stress on your shoulders, because I know that the stress will be moving into other areas of your life. It won't just be the trading, it will also be affecting the job, the home life, the business. And this is something that I help. I've spoken to hundreds of traders at this point, so if you are somebody that struggles, please don't suffer in silence. And if you've stuck around to the end, thank you very, very much from the bottom of my heart for watching, and maybe we'll speak to you soon. Thank you very much.